What about some of the other sub-asset classes?
Sure. We have a slightly different approach with private credit. So with private credit, with credit investing as a whole, we want to be as diversified as we can at the individual credit point. Because the thing that can hurt you really is defaults. We accept that there will be some defaults. There'll be some individual defaults, if we're investing across thousands of credits, which we are, but we obviously want to minimize that. So if there is one, we don't want it to cause much pain.
So you don't think a concentrated strategy in private credit makes sense?
Correct.
Okay.
So we are relatively concentrated at the GP level. So you won't see as many GPs, but the underlying portfolios of each GP is much more diversified. So then if you look at the portfolio as a whole and you look through, it is a more diversified pool.
Right. Does that mean you have to invest with larger private credit managers in order to get a larger diversification?
We do. So again, we are invested with some of the larger groups, and we do move down into the mid-market, but even those are still investing across quite a broad number of companies. So we don't tend to invest with GPs who have very concentrated portfolios underneath. Okay. We're really seeking diversified portfolios at the GP level, which obviously we then build into a broader portfolio.
So diversification is the key criteria. Is there anything else?
Underwriting. So really, it's a risk management exercise. So it's underwriting the credits, and then it's being very, very diversified across those credits. So it's really looking at that track record of the GP, how they underwrite, what types of covenants they get with the companies that they're lending money to, how strict they are with those. So it's really understanding the whole credit investment process.
It's still a relatively new area, isn't it? Private credit. I had a private credit guest on as one of my first guests back in 2019, and I felt like I was going out on a limb a little bit back then, and now it's so mainstream. But it's all very new and evolving rapidly. I read recently that there's even private credit in the investment grade space emerging. Is that something that you're looking at?
We do look at it. It's not something that we've participated in at the moment. So everything that we're doing is really sort of sub-investment grade today. But it's an interesting space. As banks gradually sort of draw back, balance sheets are not being used as much. There is space for these other lenders to come in. So it's an area again that's growing. As you've seen the equity markets change and shift over time, we're seeing this. We're seeing the same sorts of things happening on the credit side. So it's really exciting. I agree in terms of timing. So we started really looking at this in 2015.
Right.
So not very long ago, really, in terms of investing. And then we've built our business, over the last 10 years into something which is now quite sizable, and the performance has been really in line with what we've expected over time. So we're very pleased so far. And again, we expect that to grow and continue to grow as the market grows.